Hi everyone, I'm Queenie.
Hi, I'm Nicolette and we are licensed real estate consultants in Singapore. Today we'll be sharing with you all you need to know about buying a brand new EC. So today we'll be covering about the eligibility, followed by the down payment and financing, and the process and timeline.
If you are a buyer, right, potentially looking to buy a brand new EC, do stay tuned. Brand new EC is a subsidized housing, right, much like HDB BTO. So there are certain eligibility criteria that we need to meet, right, in order to qualify to purchase. First of all, either you are a couple looking to marry soon, at least one of you must be SC, right, above 21 years old. The second eligibility category that we look at is, of course, you already have a family nucleus, right? Once again, at least one of you guys must be SC. The last group, if you are single, looking to purchase with your friend, maybe the moment you guys reach 35 years old, and in this case, all must be SC, then you'll be eligible to apply. Key thing about brand new EC is, okay, due to the fact it's subsidized, we do have an income ceiling of 16K. So today you own a private property, okay, unfortunately you will not be eligible to apply. You must dispose right now and only 30 months later you can then apply. The second criteria check is, today your first housing is a BTO, right? And your second housing, you also applied for BTO again. Okay, unfortunately, you will not be qualified to purchase a brand new EC. Today, if let's say your first housing is a BTO, okay, and right now you still qualify to apply for a brand new EC. Thirdly, a lot of our clients ask us, if I still stay in my HDB, can I apply for a brand new EC? Answer is yes, if you have fulfilled your 5 years MOP.
So now looking at basically the down payment and financing. Okay, so for private condos as compared to EC, it is very different in terms of how they assess the loan. So for private condos, they go by this thing called total debt servicing ratio, which means 55% of your income can be used to service any form of debts, and that includes your car loan, your house loan, your credit card loans. Okay, and for mortgage servicing ratio, it is applicable for brand new ECs and HDBs. Okay, so for mortgage servicing ratio, 30% of your income can be used to service your monthly mortgage. So this is where we notice that in terms of the loan eligibility for both options, it is very different. If you're buying a fully private condo, we are looking at a maximum loan of 1.728. This is on the assumption that both buyers are the age of 35 years old with a combined income of 15K. And for executive condo, we are looking at a loan of 75% as well, but the loan amount would be slightly lower at 942K. So what does this actually mean to you? Okay, so if you're looking closely towards the EC specifically, ranging from 3, 4, 5 beta, prices ranging from about 1.52 all the way to about 2.4 million, with our maximum loan of 942K. What is the down payment that is required? Ranging from 583K up to about 1.45 million.
So of course, right, not to say we have to fork out the down payment all in cash. Okay, so much like today, if you are buying a private condo, okay, the minimum down payment in cash will be 5%. Right. So for the rest of the down payment, okay, if you have enough in your CPF to finance, okay, definitely we can utilize the funds sitting in your CPF OA.
So for EC specifically, if you're buying a brand new EC, there are two different types of payment scheme. Firstly, we have the normal progressive scheme, and then we have the deferred payment scheme. So what is the key difference, or why is it that ECs have these two different type of scheme? It's because most people who are looking to buy a brand new EC, they are more likely to currently probably hold a HDB flat. Okay, and the only reason why they would probably go for a deferred payment scheme is because they don't want to be holding two housing loans, because it can be quite stressful. So the deferred payment scheme actually allows buyers to still purchase a unit. However, they do not have to pay the progressive payment up to TOP. So this gives them a little bit of flexibility in terms of savings as well. So what is the key difference between a normal progressive scheme as compared to a deferred payment scheme? Okay, we look at the payment schedule. Okay, so for normal progressive scheme, we are looking at progressive installment based on milestone. What does this mean? So when a developer finish building a certain stage and they call for payment and your bank disperse that loan amount, then only will your mortgage will be dependent on the loan amount that has been dispersed. However, for deferred payment scheme, you are only required to pay a down payment of 20% and the balance will be paid at TOP. The next thing is that for deferred payment scheme, generally the prices are about 3% higher than the normal payment scheme. Okay, and we're looking at the loan assessment. When is it that you need to assess your loan? I think this is very important, especially if you are looking to purchase a property, whether it is a private property or an EC. But specifically for this, if you're looking at going for the normal progressive scheme, you do have to do your loan assessment before booking. However, for your deferred payment scheme, you have an option to decide to do your loan assessment before booking or just before TOP. Just to take note, if you are only securing a loan upon TOP, okay, the booking fee, down payment, and buyer's stamp duty will all have to be paid in cash.
So one common question we get is, do we actually have to pay ABSD when we buy a brand new EC? Premise of the eligibility criteria to purchase a brand new EC is, right, we must have attained our 5 years MOP, and if I have a private property, I cannot even apply. Right, so in short, we will not need to pay ABSD to IRAS if we're buying a brand new EC today. However, if you have purchased a subsidized housing from HDB before, resale levy will be applicable to you. So one common scenario is you have applied for a 5-room BTO before, and now you are considering to purchase a brand new EC. The resale levy payable will be $45,000. Another common scenario, you previously bought a resale HDB with family grant. The amount of resale levy payable will be $50,000. So take note, resale levy is only payable in cash, but of course you can offset this amount from the sales proceeds of your current home. For some of us, definitely we will qualify to get some grants from the government when we buy this brand new EC. So if your combined income is actually 12K and below, okay, you will qualify for the grants. Okay, so two scenarios once again. Okay, couple combined income up to 11K. Okay, so in this case, both are SC, you guys will get 20,000 grants. In another scenario, once again, couple, perhaps the first one is a first timer, second owner is a second timer. In this case, okay, the amount of grants eligible, considering 11K combined income, will be $10,000.
So now, of course, if you are looking to purchase a brand new EC, the process and timeline is something that's very important. Okay, this timeline is a bit different from a typical brand new full-fledged condo timeline. So how it works is that when the show flats are open for preview, you can actually head down to view the show flat itself. And if you are keen, then we will then submit the e-application to HDB or we wait for their approval. So once that is done, we will then get our queue number for the purchase and have access to the prices. So once we have access to the price, that's where we can go through whether it is financially sound to proceed or not. And should we want to proceed, then we will head down to the booking day to book a unit. After which, HDB will then provide the approval. So then you might be asking, oh, when do I have to make payments and all? So typically, once we book a unit, that's where we would need to transfer 5% cash of the booking fee, which means 5% of the purchase price to the developer. And then we will have about 1 week to get a bank letter of offer and submit these documents to HDB. 2 to 3 weeks later, we will then receive a HDB approval and the developer will issue the sales and purchase agreement. And in 3 weeks' time, latest by 3 weeks, you will have to exercise the sales and purchase agreement. After you have exercised the sales and purchase agreement, 2 weeks after, that's where you need to pay this thing called a buyer's stamp duty to IRAS. Okay, and when do we pay this 15%? It is exactly 9 weeks from the day that you bought the unit. So what happens after this 15% is paid for will really depend on whether you go for the normal progressive scheme or the deferred payment scheme. So if you go for the normal payment scheme, then payment will then be just progressively based on whenever the developer has completed a certain stage. However, for deferred payment scheme, no further payment is required until TOP. Okay, so if you're still confused and unsure whether you're eligible for it, you need help with your financing, do reach out to myself or Queenie. If not, do stay tuned to our next video where we'll share about some upcoming ECs and the investment potential.